Hi, we're gonna have our fourth capstone supporting course this evening. In Toronto time, it's gonna start at 9 p.m. at night. So the course is a 10 session series. Each session is 1.5 hours. So sorry, it's 2 hour and a half. Some students said it's too late for the Eastern time, and they want me to switch time. So I'll consider that. And then today in this video, I'm gonna briefly go through the topics we're likely to cover in this session. I'm gonna show you. Okay, so I always prepare four cases, one day two, 3 day three. But from the previous sessions, I think we only have time to cover three, which include one day two case and 2 day three cases. So the first one I'm going to talk about is the 2025 May day three case. First, I'm going to talk about some employee benefits. So as an employee, you work for your employer. For sure, you're gonna get your wages and salaries, like your regular paycheck. But you're also gonna get some other perks, like some other additional employment benefits on top of your salary. What kind of benefits depends on what are offered by your employer. So the question for you as an employee is that whether those benefits are taxable or non-taxable. So several points, several employee benefits are tested for this case. Merchandise discount. As an employee, you're entitled to purchase goods from your employer at a discounted price. And then there's scholarship and tuitions. Sometimes your employer, like they pay you they pay for your training so that you take some courses and your employer pay for your tuition. And then sometimes your employer give you gifts or awards. And sometimes you can sign up for recreational facilities and club dues due to your employment relationship with your employer. So, and sometimes your employer grants you security options. So whether those things are taxable, and if they are taxable, then how they are taxed on you as an employee. So that's the question we need to discuss. And a good reference is the T4130 employer guide. However, is pretty long. So I basically just highlighted the key points for you, and then I also inserted my summary notes, easier for you to understand and memorize. This is okay. So employee benefits. I doubt that you can fully understand from this T4130 guide, so that I wrote you detailed notes, and I'm also gonna go through this in great details during this session. Okay, this is the summary notes I compiled for you. My summary notes, I provide not just the tax implications on the employee side. I also provide the tax implications on the employer side. So as the employer, the company provide those benefits to the employee, then whether those costs are deductible as business expense. That's another question on the other side of this. Okay, and then special order. So special order, there can be two types of questions for special order. One, the customer come with the price. The customer says, okay, I'm gonna order in a large, like in a big um, volume, and can you accept this price? So your question for you is whether you're gonna accept or reject this special order. Another type of question is that the customer says, okay, I'm gonna order in large volume, and then what is the minimum price you can charge me? So you need to calculate the price. There's a universal formula for this. Incremental profits is equal to total contribution margin of the special order, less opportunity cost, less additional fixed cost. And I'm gonna go through every component of this formula in great details in my session. SWOT analysis, that's detailed notes, internal control weakness, corporate governance structure flow chart. So there are two flow charts in your CPA ebook, but I'll compile them into one, and it's more like organized and streamlined for you to understand what the corporate governance structure really is. And then ratio analysis, case writing notes. Okay, now let's go through the day two case, bold plan foods limited. This one is like very complicated MA topic. It's called process costing, FIFO weighted average, and most candidates often find that challenging. I'm going to go through that in great details. I'm going to first introduce what is the manufacturing procedure and let you understand, okay, this is the workflow of manufacturing industry. And from there, you can like figure out the process from the manufacturing perspective and then figure out the process from the cost allocation perspective. So there are basically 5 steps for both FIFO and weighted average costing method. Step 1, physical units to account for. So whatever like whatever amount of physical units are born, then they must have a certain condition. They cannot just vanish in the air. They're going to end up somewhere. They're going to end up either work in progress or finished goods, or they're going to be scrapped because they don't pass the quality test or whatever. Okay. And then the step 2 is you have to calculate the cost incurred in current, like you're gonna have to calculate the cost to account for, because under FIFO you're gonna you only gonna account for the cost incurred in current period, but under weighted average costing method you're gonna take into account both the cost brought in from the beginning with as well as the cost incurred in current period. And in step 3, you're going to calculate the percentage of completion, and based on the percentage of completion, you calculate the equivalent units. So under FIFO, you only focus on the percentage of completion during the current period, but under weighted average, you're going to calculate like you're going to look at the period and percentage of completion. Okay. And then for step 4, you're going to calculate cost per equivalent unit based on step 2 and step 3. And then in step 5, you eventually do the allocation. Okay. It sounds complicated, but I have calculation formula for you to follow and the calculation flow chart. Okay. I'm going to break it down and make it easier for you. And then this one is about goodwill impairment. So we covered both the technical point and also the case rating flowchart for long-lived asset impairment. And goodwill impairment is I'll say it's a different topic, and then it is more complicated because goodwill cannot um, goodwill cannot be a reporting unit or the generating unit by itself. So you need to look at the reporting unit or cash generating unit um, as one as whole unit, and then you're gonna have to assess the impairment of the unit, and you're going to have to allocate the impairment loss to each individual components of the unit, including the goodwill. And the prescribed order to allocate their impairment loss is different between IFRS and ASPE. So it's a little bit more complicated. So I'll walk through the technical first, and then I also have the case writing template for you. Okay, case writing structure and template for both IFRS and ASPE. And then we covered basic variance analysis, and I introduced the my magic formula as well as my methodology based on senior high school biology variance control. But we only talk about basic variances. Now we are gonna march into complex variances. So complex variances is based on basic variance. You need to first fully understand the basic variances, and then you're gonna understand the complex variances. It's not that complicated. It's just one add-on, okay? And then what about financial liability? So financial instrument include 2 parts, financial asset and financial liabilities. So I'll say there are 2 types of activities for a corporation. If the corporation have idle cash, they're going to invest. So when they invest, they either buy shares or mutual funds, or they buy they lend the money to somebody else. So if the company is doing investing activities, then what they acquire is the financial assets. Okay. However, if the company need money, then they are gonna carry on financing activity because they need money. They need to finance that money from somewhere else. So if they do equity financing, meaning they issue shares, then it has nothing to do with financial instrument, because if they do equity financing, they issue shares, then that's gonna be covered in the equity section. However, if they do debt financing, meaning they borrow money from somebody else, then that's going to be covered under financial liabilities. And financial liability is another type of financial instrument. And how financial liabilities are measured under IFRS and ASPE. This is the technical walkthrough, and this is the case writing template. Okay. Okay. We covered the subsequent event under IFRS. under ASPE is basically the same. It's just sometimes the terminology, like the underlying concept is basically the same, but the terminology are slightly different. Okay. And then we talk about like provision. Provision is a special type of liability under IFRS. We talk about all types of provision. I'll say lots of provisions. In the previous three sessions, we talk about dismantling obligation. We talk about onerous contract. We also talk about lawsuit. However, those are IFRS. Now we're going to touch upon the contingencies under ASPE. Remember, it is not called provision. There's no such concept called provision under ASPE. It's called contingencies. So we're going to talk about contingencies under ASPE in this case. Okay, so this one, there's a finance AO. They let you do a business valuation. There are complicated methods to do business calculation, business valuation. There are discounted cash flow method and a capitalized cash flow method. Students usually find those two methods challenging, but in this case, they only test you about EBITA multiplier. So all you need to do is correctly calculate the EBITA, and you multiply by the multiplier, then you're done with business valuation. So how to correctly calculate the EBITA? I'll give you the flow chart of this one, okay? And then in the previous sessions, we talk about how to calculate CCA. We talk about that in great details. But now, what if the depreciable capital asset is disposed? When are you going to get capital gain? When are you going to have recapture or terminal loss? Remember, depreciable capital asset disposition will never ever result in capital loss. There's no capital loss for depreciable capital asset. Okay, so how to calculate the recapture, terminal loss, and capital gain? This is the magic graph for you. I created this graph, and this is magic. Okay, and then if you fully understand this graph, then you're going to fully understand this part of my slide, okay? And then different income is taxed differently for CCPC. So CCPC income, you have active business income, aka ABI. You also have aggregate investment income, aka AII. You also have Canadian taxable dividends, okay? And then ABI is going to be taxed on two rates, general rate 50% federal as well as small business deduction rate 9%. So the active business income below the business limit is going to be taxed at 9%. A small business deduction rate, and above the business limit is going to be taxed at the general rate 15% federal. Then remember that business limit can sometimes be ground down. There are two scenarios that business limits will be ground down. If your taxable capital employed in Canada is too large, or your AAII, adjusted aggregate investment income, is too large. So in this case, because the AAII, adjusted aggregate investment income, is above the maximum threshold, which is $150,000, so that the business limit is fully reduced to zero. This is what is going on in this case, okay? Remember that AAII is called adjusted aggregate investment income. It's somehow similar to AII, but they are different things. AAII include different stuff, okay? You can call it passive income, but the tax terminology is called AAII, adjusted aggregate investment income. It's not the same thing as AII. It's different. It's slightly different, okay? So this is AAII. And then these things we went through already. And then what about the last case? Okay, intangible asset. Intangible asset, I'm going to do a technical walkthrough for you. And then this is the case writing templates. So intangible assets, sometimes they test you generically. Like it's not like internally generated intangible assets. So all you need to do is go through the definition, go through the recognition criteria. So the recognition criteria, there are identifiability, control future economic benefits. Then you're done. What if it is internally generated intangible asset, like a developed patent or license or developed software? Those internally generated intangible asset, after you discuss the definition and the recognition criteria, you have to go down and talk about the development cost capitalization, okay? And you have to go through they're going to provide you a very nice, like a very nice table for all the cost items. And you're going to have to identify these costs are in the research phase, and these costs are operating costs. These costs are advertising costs. Those costs have to be expensed. And what costs are development costs? And because they met the development cost capitalization criteria, so we capitalize those costs. And then you talk about the subsequent measurement. Okay, So this is intangible asset. I'll say for PP&E, property, plant, and equipment, there are several subtopics to test. First, they test you for definition. What is the distinction between PP&E and an inventory? Like between PP&E and an inventory, what is the distinction between PP&E and like what is the difference between PP&E and an intangible asset? Sometimes they test you for definition. And in this case, they test you for definition, okay? Sometimes they test you for initial cost. What cost should be included as PP&E cost, okay? Sometimes they test you for like subsequent merriment. Usually when they test you for subsequent merriment, they test you for ASPE because there's a specific term called betterment under ASPE. Okay, so if you meet one of the 4 criteria, then that's called betterment. You have to capitalize that subsequent cost as part of the PP&E cost. Okay, that's called like, and also sometimes they test you for componentization. There are different criteria under IFRS and ASPE for componentization. Under IFRS, you have to compare like the relative cost. And if the relative cost is approximately 1/3 of the total cost, then you say that, okay, like we need to consider separate components of this PP&E. And what is the purpose for componentization? You depreciate different components of this PP&E separately, okay? So that's componentization. And then we walk through government assistance case rating flowchart. Okay, because this is a day 3 case. They basically gonna test you for everything. And once you finish discussion of the financial reporting AO about government grant, you have to talk about the tax implications. So government grant you some money, then how are you going to treat it for tax purpose? This is government grants tax implications. And I said I'm going to keep expanding this business expense deductibility summary. So this is how it looks like right now. I added several more items onto it, and I'm going to walk through this in details every course. Okay? See you in the evening. Bye.